Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on the Nasdaq stock market. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining us this Friday afternoon, we have Mark Marex, product development specialist with Nasdaq Index Research, for a checkup on technicals in the Nasdaq-100. And Mark, it's good timing for an update considering the volatility we've seen in the index. Let's start with your first chart and take a look at relative strength.
Yeah, thanks, Jill. Great to be here at the end of a pretty eventful week. Interestingly enough, we're actually up on the day now. We were down this morning, and it looked like the week was going to end on a negative note, but looks like we might close up around 1% or more if this holds through to the close. In terms of relative strength, right, the RSI index measures 14-day kind of technical strength of the overall index. You can see I've highlighted two lines there. The line of 70, that usually means the very bullish threshold if you're above 70. You can see the line of 80 is also highlighted to show you just how many times over the last couple of years we've touched 80 on this index. And then on the very right-hand side of the slide, you can see that purple line. We actually haven't gone above 70 this year. The index has been, fairly muted in terms of like really kind of underlying technical strength. That was more of a story last year. And you can see, with this recent pullback over the last couple of weeks, we're actually approaching the 30 line, which would give you an indication of things being overly bearish, kind of overly negative and oversold. So very different scenario entering in this most recent kind of mini correction that we're seeing than the last couple times.
Now, what if we look at the short-term moving average?
Yeah, so here I've highlighted, we had two of these kind of pullbacks early September last year and in October again. And then the 20 and the 50-day, you can see those two lines tracking around the index closing levels. Those were both breached in early September and October of last year. So we didn't bounce off of those, but we did ultimately kind of recover. And you could see we were bouncing above the 20 for a while. We've broken through that recently. We broke through the 50-day with yesterday's close. I'm not sure if today we're actually going to be able to climb above that and close above that. But all that tells you is the shorter term kind of technical support levels that were there, the 20 and the 50, those are not there anymore. That's why we got to look to the next level.
And if we look at a longer term moving average chart, are you seeing anything different there? Is this sort of a blip in the radar relative to longer term technicals, or is it following through on that side as well?
Yeah, so I mean, this view makes it look a lot stronger, right? We're not even at the 100-day yet. That's the next kind of big level of support, right around, looks like 12,500 on the index. And then at around 11,500 is where you have the really long-term support, the 200-day moving average. You can see in October, after those couple of corrections, we bounced right off of the 100-day moving average. I would expect us to bounce again this time, especially considering, like I said, the beginning of the presentation, the sentiment, the relative strength of the index hasn't really gotten overly bullish recently. So I would expect that bounce to happen right at the 100-day, if not before that.
All right, and Mark, finally, let's wrap up with your last chart here. You're looking at options positioning. What is this telling you?
Yeah, so on the left-hand side, you can see the long-term trend in the put-call ratio on the SIBO. That's kind of just overall U.S. equity market option bullish or bearish indicator. We've been on a negative slope for quite a while now, and you can see, we've been averaging around 0.4. That options indicator hasn't really gotten much more bearish recently. If you're around 0.7 in terms of the ratio of puts to calls, that means things are pretty bearish. People are pretty concerned about risk and a potential bear market. We're nowhere near that. So the options positioning isn't really telling you that people are expecting a correction to happen of any kind of larger magnitude. And then on the right, you can see the vol-Q, that kind of recently launched volatility index for the NDX. Yeah, we've had a bit of a spike to about 30 this week. Nowhere near where we were multiple times last year. So things are still pretty quiet on the volatility front. It's kind of the index, I think, getting caught up in a lot of other activity in the market, whether it's in equities or whether you're talking kind of more broadly macro.
Got it. All right. Insight. Great as always. Thanks so much for joining us, Mark. And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.